Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Hope you all had a wonderful weekend. Today is Monday, August 8th, and not on a lot on this section, but we had some pretty big news on Friday after hours, so we'll go ahead and just jump into news releases, which we didn't have any scheduled. Most of this week's economic news releases, or at least the more important ones, are scheduled for late this week, including retail sales, consumer sentiment, and such. We do have a Fed statement being released tomorrow, so that will be obviously that could be potentially a big market mover. So let's just jump into the headline news. We'll report our news for today. The stock market's down big, and a lot of that has to do with the S&P downgraded U.S. credit rating right after our trading hours on Friday. So a lot of that didn't get kicked in on Friday. So today's down quite a bit. When I looked at the Dow earlier, it was about 165, down 165. So pretty big, especially when it's been taking a beating all week last week. So everything's taking a big combustion. And then Europe is still doing their bond buying program, which now this last time they just did purchase Italian and Spanish bonds. So as I mentioned last Friday, they were buying Portuguese and Ireland, but they didn't buy any Italian and Spain, and they were the ones that were people were concerned that they might default on theirs, so they were seeing higher premiums for them as well when they try to borrow money. So let's go see how this is affecting the bond market and where interest rates are moving. Friday we had the height on Thursday, and then Friday you see the red line here, where we had a pretty big drop right here. And this is, as I mentioned before, I had concerns that, but we'll probably see some profit taking because we just went up, as we saw. This is a pretty steep line right here, and we couldn't keep going at that rate because bond traders will eventually cash in, take some profit, and that's what they did here on Friday. That was before the news of the S&P 500. We did start the morning off about 20 basis higher, and we're almost about 40 basis points, almost 40 basis points from where we left off on Friday. So we left off at 102.47, and right now we're about 102.84. So we're about 40 basis points. So Friday we had a worsening in the interest rates, and then on top of it, twice actually, and then this morning now we'll probably see better rates today compared to Friday's, but they'll still be below what we saw on Thursday, where we had higher market. It'll be interesting to see how things play out with this new S&P downgrade. So we're not really, there'll be a lot of speculation going on. So we'll have to kind of wait and see what happens. This could be obviously downgraded in our credit rating. Could obviously cost us more money and be higher interest rates as a result as well. So we'll have to kind of wait and see. But so we'll wait until tomorrow and see what the Fed statement states tomorrow. Maybe there may be comments on there, and so there you have it. Interest rates are a little bit better today compared to Friday's close. We do have, again, no economic news releases today. So I'll catch you guys tomorrow. Meanwhile, if you guys are home buying or if you guys are looking to refinance, stop on my website at CaliforniaMortgageTips.com and take a look, see if there's any information that can help you out. If you're a first-time home buyer, check out my website at Mike'sHomeBuyerUniversity.com, and you might find some really good webinars I sponsor to, might provide you the information you might be out looking for. All right, folks, you guys have a wonderful day, and catch you tomorrow.